The Share Pickers Podcast with Justin Waite. Content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast. I'm joined by
Fred. Monty.
They are my sons. Monty is from France. I think he's my son. Only kidding. Boys, it's been a rough couple of months in the stock market, okay? But this is what we're going to do, okay? So a while back, we sold some of my kit, some microphones and some leads. That means we've got some extra cash to invest. Now, Fred, these are your shares, all right? You've got Amazon, Costco, McDonald's and Netflix.
I have mine.
You go on, what's yours, Mont?
Apple, Starbucks, Google, Snapchat, Walt Disney.
Walt Disney, yes. And every month I'm going to give you £20 to invest, okay? You can do two trades. You can buy one and sell one, all right? Or you can hold one. You don't have to sell anything. But I'm going to ask you this week, boys, right, to think about the companies you own and think whether they'll be around in 20 years' time, all right? That's what I want you to think about. Now, if we go through them...
Didn't Fred sell one of his?
Yeah, he sold Nike. But listen, boys, it's been a brutal few months in the stock market, okay, and these are your returns so far. Let's have a look at this. Let's log into logging into the free trade shares app, which of course is free. Now, listen, the worst performer is Netflix, down 60%. Fred, 60%. You've now got £8.71 in them, and you invested over 20 quid. Now, why do you think that is, Fred?
Because there's more,
competition?
Yes.
Yes, there's more competition. There's lots of streamers around. Now, look who's competing. Who do we watch? Who do we watch on streamers, TV streaming?
Netflix.
Yeah, apart from those, Fred. The competition to Netflix, I meant.
I don't really watch anything else.
Okay, well, I watch... What do you watch, Mont?
YouTube.
No, streaming services, TV streaming services.
Yeah, you can stream on YouTube.
Okay, but what do you normally watch? What's your favourite show at the moment?
Family Guy.
And where do you watch that?
Disney Plus.
Okay.
You can stream on that.
It is streaming. That's streaming.
Like, there's two types of streaming.
It's two types of streaming?
Yeah. Streaming, like, live.
Yeah.
And...
Oh, yeah, you mean live streaming. Okay, yeah, no. They basically mean, by streaming, they mean TV stations that are available on the internet, so stream on the internet, all right? But listen to this, Fred. Netflix have now got these competitors, right? Apple, the biggest company in the world. Amazon, one of the biggest companies in the world. Disney, another one of the biggest companies in the world. And those companies, do they only do streaming, or do they do other things?
They do other things.
Yeah, look at Apple, just sells iPhones, all that stuff. What do you get? Amazon's. We buy most stuff from Amazon, don't we? Really, everything from your haircuts to your shoes to your socks.
How can you buy haircuts on Amazon?
That was a joke. Okay. So what I'm saying is they're competing, Fred, against big businesses who don't rely on streaming. So they're in a bit of trouble. Now, so I'm going to ask you boys, think of companies you think will be around in 20 years' time. Fred, do you think Netflix will be around in 20 years' time?
No. And also, you're spitting on me.
Yeah, I like to do that. So listen, what do you want to do? Do you want to hold Netflix? Do you want to buy more of it, or do you want to sell it?
I think I'm going to sell it.
You're going to sell at the bottom? Listen, the markets have a big sell-off. Do you know the difference between... Listen, stock markets are having a sale, right? They're having a sale. That means the prices have gone down. Now, in the shops, when there's a sale on, what do people do?
Sell. Because they're scared. Buy, because they're happy.
Yes, but in the stock market, when there's a sale on, what do people do?
Go sell.
Then why do people sell when there's a sale on the stock market?
Because they're scared they're going to lose money.
That's it.
No, but you don't lose money if you don't sell.
Exactly. It doesn't lose money if it doesn't sell. It's true, Fred. Don't shush him. It's true, okay? So you want to sell Netflix, yeah? Now, I want to think, I've got a list of companies here, big companies, okay, on the screen. I want to show you this. They are the biggest companies in the world. Look through them.
Apple!
Is there anything... We own Apple. So, Fred, what do you want to do... Mont, be quiet a second. What do you want to do with your Netflix shares, Fred? If you sell those, you got £8.71 to invest. Big time, big bucks. Yeah. Do you want to buy some more of the stock you have? This is the stocks you have. You've got these. Amazon, Costco, McDonald's, Netflix. So you're selling Netflix. Do you want to put more into the stock you own, or do you want to buy one of these? Maybe Microsoft, Amazon, Tesla, Berkshire Hathaway. That's owned by Warren Buffett.
owns Amazon.
Monty, shh.
Shut up.
That's owned by Warren Buffett. He's the richest guy in the world. Meta is his Facebook.
No, I thought it was
One of the richest guys in the world, Johnson Johnson. Do you know what I like?
Tesla.
Do you want to go Tesla, do you?
Yes.
Will it be around in 20 years' time?
Yes, because they're just starting to get automatic cars, and that's what people are going to start.
Do you mean autonomous, drive themselves?
Yes, and that's what people are starting to get, and also it's better for the environment. So when the environment comes like really bad, people are going to start getting them to help like pollution and all that.
Yeah, but let me ask you a question here. Let me ask you a question here. Well, I'll ask you a question, Monty, Chatterbox, when you're ready. Listen now, I'll ask you loads of questions. Listen, so think about Tesla and what they're doing. They are a market leader in electric vehicles, yeah? Right? Are other companies going to be doing that?
Yes.
What about the bigger companies? We got another Netflix. Is this another Netflix situation where Netflix was the first leader, right? The first one to start doing it, and then other big companies came in. Is that going to happen to Tesla? You got BMW, you got Audi, you got Volkswagen.
Yeah, but they're not autistic.
What, you're not autistic? I've got an autistic car.
Apple.
They're not automatic.
Autonomous.
Because like they're like, oh, you have to ride them, put your thing on the gear.
Okay. So you're going to sell Netflix, you buy Tesla, yeah? Okay, listen, boys, this is it this week. Listen now, listen to me. I'm also going to give you not £20 because we've had a bit of a bonus because I've sold some microphones, some cables on Facebook. I'm going to give you £40. So, yeah. Okay, so he's selling his Netflix and buying Tesla, but you're only going to buy £8 worth of Tesla. Do you want to buy any more of Tesla?
No, I'm going to go for a bit of Microsoft.
Okay, you'll buy £20 in Microsoft. Will that be around in 20 years' time?
Yes.
Yeah, it's been around 20 years already. It's still a market leader, pretty much. So you'll put £20 in Microsoft, okay, and give you another £20 to put in what? So you can put it in one of your stocks. Let me just look at your how they're doing, Fred, your stocks, okay?
Let me just see your...
When am I going to get a question?
Next year.
These is looking at me like I'm a pretty...
Buying too many stocks is bad. Costco's doing very well. There's Amazon,
Adobe.
Because it will get frozen.
What do you think? Wells Fargo, Adobe. What are the ones you heard?
Adobe Spark.
Visa.
You want to buy Visa, yeah?
No.
Walmart.
No one uses Visa. It's all about cash these days.
So look at the stocks you own. So you're going to buy Microsoft. You're selling Netflix, okay? You're buying Microsoft. Do you want to put more in Amazon, Costco, or McDonald's then? Or maybe more in Tesla because you have not bought any of that.
No, I'm gonna go Costco because it seems to be doing pretty well, and you can get everything.
Okay, so he's selling £20 at Costco. And write this down. £20 there. You're gonna buy £20 in Microsoft, yeah.
Not stop fidgeting.
Yeah, stop fidgeting, Mont. And Tesla.
Give me any question.
Okay, Monty's turns now. Let's have your turn, Mont. Okay. Here you go, these are questions, Mont.
Born ready.
Okay, so Mont, your stocks are...
I know them.
They are Apple, Disney, Google's... Let me tell you something, right?
You didn't say them.
Snapchat is down 42%. It's not as bad as Netflix, but it's down really... who owns Starbucks? You do, Mont. They are down... 28%. Okay, so down quite a bit.
But I don't want to sell at the bottom.
Apple is Apple going to be around in 20 years' time?
Yes.
Yeah, you're going to keep that. Disney.
Apparently they're going to build a car.
Okay, an Apple car. Is it round with a big stalk on the top?
No.
You can only get it in green. Okay. So,
and red.
Yeah, red and green apples. Yes. So, what do you want to do? You've got. Think now. Is Snapchat going to be around in 20 years' time?
Yes, no. Just like it's going to be around, just like very unused.
Yeah.
Well, it's going to die then, is it? So, would you consider selling Snapchat, Mont? Maybe.
Yes.
Okay, selling Snapchat. Okay.
Buying.
What are you going to buy? So you're going to buy.
I don't know.
Do you want? If I were you, I'd stick with about.
Can you put all your stuff up?
Yeah, I'd stick with about 5 stocks. But you say so. Yes, look at it. So he's going for Microsoft. What are you going to go for?
Tesla.
Tesla as well.
Wait. What do you mean as well?
Well, Fred's going for Tesla as well.
Oh. Johnson Johnson.
Johnson & Johnson, do you know what they do?
No.
Okay, that's not good. Walmart is good. Walmart are one of the biggest supermarkets in the world.
MasterCard.
They did own Asda for a while, Walmart.
MasterCard.
Oh yeah, Walmart.
You want to go on MasterCard? Why not Visa?
Tottenham sponsor MasterCard.
Tottenham sponsor MasterCard.
MasterCard sponsor Tottenham.
And that's the way you want to go for them?
Yes.
Okay, there's some others. Coca-Cola?
No.
So are you sure MasterCard's will be around in 20 years' time?
No, it's not.
If you think about it, may be around, of course it will.
Other credit card. There are other credit card companies such as Visa, Santander, Barclays.
Go Henry.
Go Henry.
Yeah, but listen now, but also they're now becoming more new payments, aren't there? Like people are trying to do crypto payments and all that stuff. So will MasterCard, do you think, be as big in 20 years' time on? You want some company that you think their products are amazing or what they're selling is amazing, it's going to be around in 20 years' time.
I only know one person that has MasterCard.
Who's that?
Nanny.
Well, that's not a reason to invest, is it? What do you reckon? Will Coca-Cola be around in 20 years' time?
Yeah.
Do you
But
want
I
to
don't know.
Okay, Walt Disney got that. Let's scroll down.
He's going down.
Yeah, Oracle.
He's all bad.
They're not. They're massive companies. McDonald's, Wells Fargo, Salesforce, United Parcels.
Philip Morris.
No, cigarettes, Monty. You don't want that.
Yay!
That's exactly what I want.
Experiment Express.
I do love how a little puff on the ciggy.
I want Morris.
Morris, Target.
No, I want Morris.
PayPal?
No.
Okay.
I want Morris.
You're down to the 80s.
I want Mum Morris.
Fish down there, look. Starbucks is down there.
Old 3M, they invented the post-it notes.
Yeah. So, Mont, what do you want to go for here?
Morris.
Facebook? No. Meta? No.
Morris.
Philip Morris. You want to go for Philip Morris?
Yes.
Cigarettes?
Yes.
Do you think cigarettes are going to be popular?
I do have a...
In 20 years' time?
Yeah, because all the teenagers are getting them now.
Are we vaping one? I'll be like... Sucking my mango flavoured woolly looking thing.
Okay, well, yeah, vaping is getting more popular. But is it a growing industry, do you think?
Yes.
Is it
Cigarettes, yes.
Even like...
No, everyone's cutting back on cigarettes.
Even like 12-year-olds now are buying vapes.
Things
So, like
about
this kid in my years... This kid in my years...
Okay, I won't get Morris Johnson.
What about Johnson & Johnson? They're like cotton buds, all that kind of stuff, baby powder. Yes?
I say you go for the ciggies.
Okay, listen, we can't see you smacking your bum. There's no point doing that. So what do you want to go for? Think. Or do you want to go... Listen now, you've got some...
Porsche and Gamble.
Procter & Gamble, you fool.
Yeah, Gamble.
Listen now, you got Apple, Disney, Google, Snap, you sold Snapchat, yeah? Sold. Okay, so... Or you can put £40 into these.
No.
The ones you already got.
I want to get something.
Oh, okay. Don't accumulate lots of stocks. So think now, look there, you go. Apple, Microsoft, Alphabet, Amazon, Tesla, Berkshire Hathaway. Warren Buffett owns that. Warren Buffett's the most successful investor of all time.
What does it do, though?
They invest in other companies.
Berkshire Hathaway.
Okay, so you put $20 in that.
company, because that would win.
Yeah, it's Philip Morris.
No, don't you stop smoking.
No, anyway, listen, they own vape companies as well.
Right, Monty.
I want to get Philip Morris.
Okay, so £20 in Berkshire Hathaway, £20 in Philip Morris, and
Yeah.
and you're sold your Snapchat. What do you want to put that towards? Where do you want to put that in?
Berkshire.
You want to put in Berkshire as well? Okay. All right, cool. One other question was last week I asked you what the difference between an asset and a liability was. One is when you owe, one is when you own. Which is which?
Asset is when you owe.
I have no idea.
Own, I meant, yeah.
A liability is something you owe.
Oh, yeah, I knew that.
Okay, this week's question is this, okay? This is the educational beat, boys. Listen now. How do you earn money investing in stocks and shares? How do you earn money?
Well, there's lots of different ways. You could get
wait for it to
crypto.
rise.
So if...
Rise.
Well...
Right, what do you say, Mont?
Rise.
So if the share price rises... So let's say you buy a share... Okay, let's say you buy a share at £1, it rises to £2, and you sell it, you double your money, haven't you?
So, if you bought Apple when it just came out,
Yeah.
You'd be rich.
You'd be a millionaire.
Yeah, okay, there's two ways to make money in shares, okay? That's the one way, that's called capital appreciation. That means it goes up. There's another way as well.
Investing.
Sit up here, Fred.
Gambling.
Owning.
No, dividends. Do you know what dividends
you told me
are?
about that.
Do you know what they are?
I don't know.
Yes. Depending on the company, but not all companies do it.
I
Go on,
do.
go on.
I do. So like, if you own them, like they might give you like a discount or something.
They might give you some money.
No, so every half a year, well, it depends on the company, the big companies who make big profits, okay, they share their profits to their shareholders.
That's
And how
what
do they do that? They give you a certain amount of money per share you own. So let's say you own, let's say a share is Microsoft. Let's say Microsoft is £1 a share, for example, right? And they announce half a year, say we're giving all our shareholders 5 pence for every pound of share they own. So how much is that percentage wise? 5 pence in the pound. 500.
20%.
5 of 100. 5.
50%.
I'm working with some geniuses here. 5%, you simpletons. 5 out of 100. So, listen now.
25%.
So they will pay you money just to hold their stock.
Oh.
So, there's two ways to earn money in stock and shares. Capital appreciation, share price rises, you sell a profit. Or, if you hold them for a long time, they give you money to hold their shares. Is that good? They give you income just for sitting there doing nothing. So you sit there, because you know why they do that? Because you're a business owner, and you're sharing in the profits with them. See?
Yeah, but what are you doing? Just sitting there.
Well,
Sitting there minding your own business. Then ring ding ding. PayPal. You own 5 pence.
So basically, Mon, you're a shareholder, a part business owner, because you've risked your capital, your money. They want to reward you as a shareholder being part business
What if
owner.
you only put £1 in?
Well, it doesn't matter. You have less amount of profits coming to you.
1p.
You share in the profits of the company, you see? That's it. Have you learned anything this session, boys?
Yes.
What?
What a dividend is.
What is it?
It's where, so the big companies, every like half a year or something, so you put £10 in, you get like every pound you put in, you get like 5p back.
Yeah, they will pay you just to hold their shares. What have you learned, what?
How simple Fred is.
And on that note, we'll catch up next month, and hopefully your brains will have grown and your bellies will have got smaller.
Why?
Because you're both a bunch of funnies.
The Share Pickers Podcast with Justin Waite. Content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.